Good morning, everyone. This is Elliott Wave, and what you're about to see is this indices video that I posted on September 10th for the patrons member only. As you can see, all of these videos are unlisted. I post one video a day, mainly about the US stock market, but I also cover gold and cryptos. So most of the stuff I say in this video are valid because somehow, maybe it was just luck, I was correct. So enjoy the analysis, and if you want to gain access to all of this, then the link to the Patreon is down below. It only costs €12.69 a month, euros, and I can't wait to see you there. Good morning, everyone. Today is Wednesday, the 10th of September. It's European morning, as usual, and this is a video for the indices. So before we get started, give me 30 seconds. I just wanted to say I didn't record this yesterday because I wanted to see, particularly for the Nasdaq and the S&P, how they went on in closing. I looked at some of the stocks you proposed, as you can probably see here. And also, I think I'm going to add to the list Texas Roadhouse and Booking.com. All right. So Booking.com is actually, if you look at the chart, you're going to be like, why didn't I buy this sooner? The problem is, like, one share is $5,000, which is ridiculous. Hopefully they'll do a stock split soon. But both Booking.com and Texas Roadhouse are covered by Joseph Carlson, the YouTuber I mentioned here a couple of times. And if you look at the chart, you're just gonna be like, as I said, why didn't I buy this 3 years ago, 2 years, even last year? Anyways, the DAX. So if you remember, remember, this is not financial advice. I'm not a financial advisor. So the DAX. If you remember last time around, I think we were around here, and I wasn't really seeing any impulsive move, which is why I also came up with the alternative account, which we're gonna see in just a second. It's still the same. Now, so here's the thing. I'll be pretty straightforward to the point. You can count as 1, 2, 1, 2, 3, 4, 3, 4, 5, A, B, C. But then here you need 1, 2, and upside. So you need to explode higher. So we basically need to go higher and fast by the end of the week. Okay. So the market opens in 40 minutes. So that's the only way I can see this as being a way for bottom in place. On the CFD, so the futures market, basically, this is 3. Okay, if I want to fit it as 5, I'm just lying to my own eyes. This is 3. So So what I like to say is the market doesn't care about what I think, but what I see does not suggest any bullishness. So it does not suggest a way for bottom is in place here, which is why we are prepared for the alternative count. And here you could count this as the wave down. The way down, you can count it as something like this. Basically, it would have to be something like this. The box, if you don't remember, represents where equality of C against A begins, and the end is 1 + 1 8 C against A. And if you remember, I talked about how you could, EWF, the Elliott Wave forecast, the other, one of the major wave companies, which, again, not going to say anything about it. They do, they wait for equality and they buy off equality. Once they identify a 3-wave move, they buy off the equality no matter what. And as I said, and as I showed you, most of the times what you get is at least a bounce. So that kind of buys you time to move the stop. But it's not a guarantee, but it works for them. Anyways, as of right now, I'm going to say this is my preferred count for the DAX. So with the Dow, I actually came up with an alternative count. Okay, believe it or not. And it's quite bullish. So let me zoom out for a second and show you something. So as you can see here, for the Dow, I'm extremely bullish. call me crazy. It's okay. I'll take it. Basically, here, and everything here could be moved 1 degree lower. Okay, so even more bullishness. Basically, here what I'm saying is, it's a 1, 2, a 1, 2, 1, 2, 3, 4, 5. I wanted to highlight how this wave 3 is 1.618 times the length of this of the corresponding wave 1. So it would be a textbook Elliott Wave 3 length. Okay, here upside still 1, 2, 1, 2, 3, 4, 5. So it would still be kind of like the same count we had for last update, short term. Okay, infinity and beyond basically. So if this was the count from last week, okay, 3, 4, and then upside, it looks like we might have had a 1, 2 here, especially if we look at the Nasdaq and the S&P, which we're going to do in a second. Okay, but here we are forecasting a significant top in place. Okay, because we need to retrace all the way from the April lows, whereas here we're much more bullish. Okay, now which one is it? That is the question, guys. If I knew the answer, I most definitely wouldn't be telling you, or at least I wouldn't be telling you for 12 euros a month. I can rest assured that. But what I do know is that they both fit, and to be fair, this actually, the more I look at it, the more it looks good. Especially now, what I like to say is, if you chart on a bar or candle graph, then you need to stick with it. But if you move on to the line chart, if you actually pay attention, this kind of fits, doesn't it? This is the largest correction ever. Okay, we all agree on that. You can count 5 here up into wave 1, down in 2, 1, 2, 1, 2, 3, 4, 5. Now, what I can say and will say is, you could do this. Even though the problem is, you do that, you have 3 waves into wave 5. 3 waves a trend don't make. Remember that. It's just gotta, every time you do Elliott Wave, you just gotta have it written on the wall. 3 waves a trend don't make. And it's most likely wave B or X, so a connector, what is usually referred to as a connector, then a wave 5. It's not impulsive, which is why I prefer this count. But time will tell. So a bit of uncertainty there. Now, the big guys. What you guys want to hear, I'm sure. So, not much has changed. And even from the last update, where I think we were on here, it was the 5th. Was it the 5th? No, probably the 4th. Okay, we were looking for a 1, 2. Now, it is possible this was the 1, 2. And this is, so there is a bit of, so if we look at the futures market, this looks like a 1, 1, 2, 1, 2, infinity and beyond, okay? If we look at the cash market, which is what I like to do, I mean, how would you count this? 1, 2, 3, 4, 5, maybe. That would have to be sub-micro, so. And please note, I don't really like to go that down into the time frame because for 2 reasons. One, by the time I you guys see this, especially if you're in the US, so you're not right now, you're in the middle of the night, hopefully you're sleeping. Then it's, by the time I upload it, the count could be proven to be incorrect. Number 2, basically because the more I dig into the count, the more is the higher the probability I mess up. Okay, and I use messed up to be gentle. to be user friendly. Let's say that. So that being said, it is possible to continue higher. I do see the bullishness. Now I said that, and the market's going to prove me wrong, but I see that. And for reference, once again, this wave 4 could be moved here. So this could be 1 and 2 of this degree, okay? So basically what I'm saying is we could have a bit more limited upside, but still much more to go. At least towards 25,000, which is going to be clearly the next big number. It's medium level between 20 and 30,000, all right? So it's very important. But yeah, overall upside. So basically the low to keep track of is this one. If we do have a wave 2 in place, we should not, based on this count, and also its alternative count, we should not move south of that low. Okay? That should confirm the count. Now, with the S&P is very similar. I left this because you see how, I just want to show you, remember how I said, look, we need something on top of 65,000, sorry, 6,500. We're kind of getting it. And again, it looks like a potential. So here you could argue it is a bit different. Oh God. Because you could say this is a wave 4. But then again, if you look at the futures market, it's more a wave 2. Oh no, it's actually a wave. Oh, it looks more like a wave 4 here. I'm gonna lie. It looks more something like this. All right. So see, that's the problem with smaller time frames. There's so many possibilities that it's hard to pick one because they all fit. Because you have a lot of noise, and with too much noise, you get distracted. All right. Remember that. Noise is not always good. And once again, here, this could be moving. It could be moved here. Sorry, guys. So this could be moved here. 1, 2, 3, 4, 5. Into. It depends. If we extend, it could be this wave 3. If it doesn't extend, it could be wave 1 or 3. You see how many possibilities you have? Just because I have so much noise to filter that it opens up to many scenarios. But I guess we got to stick with the numbers. So let's see what happens on top of this 6,500 because it's very important. It's medium level, remember? It's between 5,000 and 80,000, so it's medium level. So let's keep an eye on it. And yeah, that'll do. It's all. It could have been a bit of a confusing video, but I guess the takeaway is the more you zoom in, the harder it gets. Even, I mean, I'm no one, but I've been around. I've been doing this every day, kind of professionally for many years, and yeah, it's tricky even for me. So sometimes it's just better to, zoom out, take a breather, and remember, you don't have to trade something. Nobody's pointing a gun at you, asking you to trade. Especially asking you to trade one specific thing. That's what institutional traders do. They have to trade. They're paid to trade. You got that advantage. So use it. Any questions? Let me know. And thank you for watching, guys.